Well, it's been a tough week. I mean, this has been a victory for those who've been bearish. But to me, this is also a reminder that the stock market and investor views about equities really depends on FAANG. You know, FAANG didn't do well this week in earnings, and it really sort of took some of the support out of stocks. Do I think the FAANG thesis is changed or broken? I mean, I don't think so. To me, if someone hasn't owned FAANG all year, this is a chance to get in.
But the thesis can be intact, right, that these are the places you want to be. You can have that while still saying, you know what, the stock's got too stretched and the valuations got too rich, and now it's time for a pullback.
Yes. I mean, you know, we're down 10% from the highs for the S&P, so I think a lot of bad news is baked in, but we've also done, as you point out, a lot of technical damage, and people don't like the 10-year at 5%. I mean, this is why next week is pretty critical, because we do get some pretty important data points.
I mean, momentum's a dangerous thing at times, right? I mean, you can say, well, it can carry you when the times are good for these FAANG names, and that was one of the criticisms the whole time. It's 7 stocks, and 493 stink, and then now it's 493 still stink, and the 7 look dicey. That's a problem.
It is. I think there is some good news. You know, I think this week there has been some improvement in the internals of the other 493. We did a report even last night about how the small caps are starting to look a little stronger. So I think the 493 is less bad. And in terms of returning capital and compounding capital, the FAANG story is strong. So you're right. I don't know if the market's comfortable with the multiple now, but in 12 months, I think they're great opportunities.
Is this a cautionary tale about where earnings expectations have gone? That's been the big debate. Now we're out of the earnings recession. We start to get liftoff, and then we get higher and higher as you turn the calendar into next year. Do we need to rethink where we are because we're worried about the economy? Rates are high and may remain such.
Yeah, I've got a contrarian take on earnings. Number one, if you look at the stock market reaction of those that beat, they're up 0.5%. That's better than Q1 and Q2 of this year. So actually, we're getting better reactions. It's just like you said, it's more in the 493, not the FAANGs. The PMIs have turned up year over year, and historically that leads to earnings growth year over year. So it's confirming that earnings should strengthen from here. And if we look at even Q3 earnings, you know, they've actually gone up 2% since the start of reporting season. So I think the FAANG's disappointed in terms of market reaction, but the rest of the market's actually been okay. And I think that is what's going to help us get through the rest of this year.
I just wonder if there's a counterintuitive way to look at that. So PMI is good for earnings. However, the Fed doesn't necessarily want all this to be good, right? They want demand in some respects to start to slow down, and they've been unsuccessful in getting it to do that. So as they potentially step up their efforts to make demand slow down, that potentially hits earnings, doesn't it?
You're right. I think there is a view that the Fed is running out of patience. They're like, look, when are we going to break the economy? But I think maybe the more subtle point is I think the Fed would like to see the labor market slow down, because we know underlying the two big drivers of inflation are housing and autos. They've slowed, but the job market's still strong. Next week is the jobs report. If it's a little soft, I think that takes the edge off. And of course, next week we get the FOMC meeting. And again, I think that they're going to be patient, because a lot of tightening, especially 5% 10-year, is already going through this pipeline. So I think the Fed can actually be patient. Sure,
but no. Now, I agree with you that the backup in rates has given them the flexibility to be patient, and suggests that, well, the move in rates has done some of the work for us. However, if the labor market starts to show softening, then we have to worry about what's been the whole key to this thing to begin with, and that's the consumer remaining strong. Job losses pick up, spending goes down, the soft landing story starts to unravel, doesn't it?
It's a delicate balance, because, you know, you really want to see jobs at 100,000 a month, and you want to see wage expectations cool off. So it's a tricky calculus, but I think that we don't have to reflexively say, hey, if the job market slows down, we're headed for a hard landing. That might be the market's reaction, but then that ends up being an overreaction.
You're still a Bitcoin bull?
Yes.
I want to end our conversation on that, because I think it's the best performing asset class of the year. Yeah. Certainly one of them. It's up more than 100%. So what's your view of it here? And why has it been going up the way it has been recently?
Well, there's a couple things. One is it's been real buying. So there's real money institutional buying. We can see it in the CME volumes at all-time highs. Mm-hmm. And we know Asia has been buying again, and they've been absent. So this is true people wanting to get in. It's been a good sound money story, especially as we worry about Washington.
ETF optimism, too? Is that where you're going to go also?
Yeah, the ETF, I think, is far bigger than people realize because, again, supply is going to be only 12 million a day after the halvening. ETF could be $100 million a day of demand.